Traders at UBA say stable liquidity levels will push high demand levels in the secondary market as investors channel their unfulfilled market auction bids from last week's auction into the secondary market. Ifeoma Onyejekwe, fixed income trader at UBA, joins me for a midweek update on activities at the fixed income market. Ifeoma, thank you for taking the time out to join us today. I'd like you to first of all bring us up to speed on the outcome of the DMO's 150 billion bond auction today, if the results are out already.
Thank you, Esther, for having me. So the results are not out yet, but as we saw bids coming, we saw a huge, apathy among investors, and this might be as a result of the 250 billion sukuk bond which the federal government aims to raise by year end. So yeah, it was very disappointing. We didn't see a lot of bids like we normally saw, but the results are not out yet.
If that is the case, could there be potential impact on the rates if there aren't bids? That many bids, what's going to happen to the rates?
Yeah, it's likely that we see stock rates, especially on the 2050 bonds, stop at sub 13% levels. So the rates are likely to, decline.
That's interesting. So let's take a few steps back. Just bring us up to speed. What you've been watching, events you've been watching at the markets, from the treasuries to the bond market, investors' appetite, what part of the yield curve we're seeing the most action, and 3, the inflation reports that investors are digesting.
Liquidity challenge has been the theme for this week, and this is a result of the retail FX auction which took place on Friday. So last week, liquidity was very buoyant, around 400 billion levels. But as we came into this week, system liquidity has been below 100 billion. So that the market has been very tight. We observed money market rates climb to 13 and 14% levels from 3% and 4% levels last week. And we saw huge interest. We saw huge demand for treasury bills in the market, but because scarce supply could hardly beat it, few trades were consummated. And as for the inflation report, it was just as expected, but we might see a reversal of this decline in inflation rates owing to food and gas prices. So as inflation continues to rise in those areas, it might tilt the CPI to start increasing again. From 15.99%, it might climb up to 16% levels and above.
Okay, let's quickly talk about the FX market. I know that illiquidity still persists, even though we are still seeing interventions from the Central Bank of Nigeria. But I know that the CBN is sort of prioritizing foreign portfolio investors. This is something we've talked about for quite a while now, and I just still want to get a sense of to what extent has the Apex Bank been able to clear up that backlog? Or, is it continuing? Are we still seeing an increase, or are we anywhere close to clearing that backlog?
Yeah, I think we're close to clearing the backlog, because you would notice from last week and even this week, the Naira has strengthened, and it was a good move in the market. Investors and everybody welcomed the strengthening of the Naira. So we can see that the central bank intervention is really working, and we hope very soon, we know that very soon, that they would clear up all the backlog.
Now, being the last quarter of the year, how would you describe trading since this quarter started, or perhaps comparing it to the last quarter? Any highlights or themes that do you think are worthy of note in terms of how investors have played the market?
Well, investors really have moved away from trading, and they're investing more in fixed deposits where they can get higher rates rather than in treasury bills. And even though we saw demand, like I said, there has been demand, but because liquidity challenges here and there, it has been difficult to meet the demand of investors, and supply of bills, they are not as much as they used to be in the past.
Now, for the bigger players like institutional investors, the pension funds, how have they been adjusting their portfolio? I know that for them, obviously, the equities market is a riskier market, but I think I saw in some headline today where they appear to be putting more money in that market. How have they played the market this year? Has the market been good to them this year?
The market hasn't really been good to them. That's why we see them do more of term deposits than invest in fixed income securities.
All right, let's talk about your forecast for the rest of the week. What should we expect from across the bond, T-bills, and also the FX market?
Well, cautiousness in the markets. We don't see the liquidity challenges abating very soon. Yesterday, we saw almost maturities of 72.5 billion paid into the market, but that wasn't enough to assuage the liquidity seen in the market. So players will be very cautious, and trying to fill in their funding gaps however they can.
All right, Ifeoma, thank you for talking to us today. We appreciate your time on the show. Ifeoma Onyejekwe, fixed income trader at UBA.